I would like to show recent market examples representing the high probability signals that I just presented. We are looking at two 6E charts. On the left is a higher time frame and on the right is a lower time frame. Always start with a high time frame. You notice here we have a few green candles and fast magenta moving average has been rising, but the slow moving average has been flat. Okay, so now we are anticipating a moving average cross above, meaning we must have the aqua moving average rising as well. And between those two moving averages, maximum 4 ticks, and price must break above the slow moving average, which should be around 43.67. And when it happens and the signal candle is green, we'll switch to 5 range for a long opportunity. We will only consider a long signal when we have all the 5 range conditions, meaning the triangle which we have already. So we need to have the slope rising, aqua, and then the momentum green, and price breaking above the aqua slope, and certainly the signal candle or the entry candle has to be green as well. So let's see if we may get it. Okay, so we're waiting for the aqua moving average and also price breaking above 43.67.
1 on 5 range.
Okay, we got it. So we place an order because we have on the 5 range we have the triangle, we have the slope going up, we have the momentum, and we just got in at 43.67. We have 2 contracts. The first one profit target at 10, and then the second contract we don't have a predetermined profit target. Initial stop loss 6. So we have the stop loss at 43.61. We're waiting for the trade to move to our direction before we adjust our stop loss according to the little dot 1 tick below for a long trade. So we have here 43.64. So if we're going to adjust our stop, we will adjust it at 63. Okay, so we're waiting for our first target, and our stop loss now is 4 ticks instead of 6. We can adjust. Oh, we got our first target. Good. Now we just need to adjust the I need to adjust the sorry I have to adjust the stop loss according to the little dot. 43.69. So we have our stop loss now 2 ticks above our entry, so we're going to move again at 43.75, meaning for our second contract for sure we'll have at least 7 and 8 ticks if we get stop out. Oh, we just got stop out. So a quick recap on this anticipation moving average demo. We have here, we got our moving averages both rising, maximum 4 pips, and price break above. So we have an entry reference at 43.67, and this candle has to be green, right? So we switch over to here. We have the beta indicator that I mentioned earlier is still in development. We're testing it, but this will print a reference entry line on the 5 range, and also you will give us the price as well, which was for those 1 years 43.67. So we enter at 43.67 because we have all 5 range entry conditions met. We enter, and then we got our first target around here, 77, and we adjust our stop loss according to the little dot 1 tick below, and we got stop out right here at 43.75 for the same contract, meaning 8 ticks. And for those, of course, if they have a bigger cushion for the stop loss, then they will go further up. But this is based on historical data. If it's real time, then we adjust according to the little dot, so our last contract will get stopped out right here. Okay, so I hope this is clear, and I'm going to switch to our second market example demonstration. For the second market example, it is a re-entry demo. We're looking at two TF charts. On the left, a higher time frame, and on the right, a lower time frame. On the higher time frame, we already have a crossover, meaning we have a defined uptrend after this crossover here. Let me mark it for you. So after this crossover, we have a defined uptrend, meaning we'll only focus on the lower time frame for a re-entry long opportunity. Right now we have the up green triangle, which is the first entry condition on the lower time frame. Now we're waiting for the other four entry conditions, such as the slope has to be aqua. Right now it's magenta, and we need to have the momentum from red to green, and price has to break above the aqua slope, and certainly the signal candle has to be green as well. When we have the remaining 5-hour lower time frame entry conditions, we quickly check the 9 range, make sure both moving averages are still rising, and we have a green candle. Okay, so let's see what's going to happen and whether we will have an opportunity to place a long trade. Our focus is on the 5 range, so we're going to we got all those, so we're going to try to enter right here, 674.40. we enter. Now we got the audio. We have exactly the same, which is the stop loss at 6, and then the first target at 10. And for the second contract, we don't have a predetermined profit target, and I always recommend the users to exit a trade if they like the text that they got. You don't need to wait to get stopped out. Okay, so we got here, we got our first target already. It's a very fast price movement for the TF for that morning, so we're going to adjust our stop loss according to the little dot. We have over 20 ticks already for the second contract, and we got our first 10 for the first contract. So if you want, you can exit right here, for about 30 ticks. But for demonstration, I will just adjust the stop according to the little dot. Adjust it again. 69. Okay, so we got 30 ticks for our second contract right now, if we get stopped out, that is. And the trade move right now here to 78.30, so almost 40 ticks. Oh, just got stopped out. So for the first contract, we got our 10, and for the second contract, we got almost 30 over 25. So
going short.
You just heard an audio asking us to go short, but remember, we must, well, that's my recommendation, pay attention, or just like go with the overall trend direction. So I would not recommend counter trend trades. So this one here, we have a defined uptrend on the higher time frame. So after the cross above, for re-entry, we will be only focusing on the long trades and not short. So we got out of this long, and when we have this red arrow and the audio is asking us to you're going short, actually they are the warnings to those who were in the long trade to get out. Okay, so this is another re-entry right? We heard the euro going long, so this one will be the re-entry again, and this one I believe is good for another 10 ticks, and this again is the counter trend warning us to get out, and this is another re-entry opportunity. And I must emphasize that for the alert indicators on the alert indicator on the 5 range, that will plot the up and down arrows plus the optional audio alert. It works independently based on the 5 range entry conditions. It does not know whether we have a defined trend on the 9 range is going long or short. So this the possible long on the 9 range, that indicator, or the multi-time flame on the 5 range, this one is based on the 9 range, and it does not communicate with the 5 range alert indicator. So I hope you enjoy this, and we'll talk soon.